नमस्कार, मैं आपका दोस्त सीए मनमोहन जिंदल, registered value institute and financial assets. So today we shall discuss the caveats, limitations, disclaimers, which is security and financial assets valuer can use in his valuation. Now, so since the work is of analysis of financial information and accounting records, so the engagement of the registered valuer is not for the audit. In accordance with generally accepted accounting standards of the client or the business. So the information received by the registered valuer is analyzing for the purpose of the valuation. He is not responsible. He is not carrying out the audit as per the general accounting auditing standards. That is the work of the financial auditor. So, auditor will not assume any responsibility and make no representation with the accuracy or completeness of any information provided by or in behalf of the client. Client, what information he has provided, so he will not corroborate, he will not argue, he will not make representation that it is accurate or not accurate, it is complete or not complete. So, the registered values report is on the basis of or subject to the scope and limitations detailed hereinafter. The report to be read in totality and not in parts in conjunction with relevant documents referred to therein and context of the purpose for which it is. So, जिस पर्पस के लिए बोला गया है, जिस डेट के लिए बोला गया है, जिस इवेंट के लिए बोला गया है, उसी रेफरेंस में उसको पढ़ा जाना चाहिए. So, valuation is not a precise science and it is a art. Then the conclusions are arrived on the subjective information and dependent on the exercise of the individual judgment, professional judgment, common sense, and the surroundings of the with the registered value. So the value given by the RV is undisputable single value if normally express our opinion on the value as falling within likelihood. So every valuer, other valuer can differ with this valuer value of the asset. So it is an undisputable single value. The expression of single value have adopted a value at the midpoint of our valuation. So we feel that the value of this property or this asset is either 95 or 100. So we can say that it is near 90 or the 90. While considering our value range of values to be both reasonable, defensible, based on the information available to us, others may place a different value on the company of the business. So every value has his own judgment. Every valuer has his own professional judgment. Every valuer has received some more or less information. So value can be different. The actual market price achieved may be higher or lower than the estimate of value or value range depending upon the circumstances of the transaction. For example, the competitive bidding environment, the nature of the business, or the purchaser perception of the potential synergies sometimes it happens that the property is purchased on account of emotions, on account of his future planning, on account of the capacity of the individual borrower or purchaser. So factors differs. Suppose a property is likely property is saleable in the market at rupees 100, but the purchaser is very much interested in that property. He may give the value 110, 120, 125. So nobody can stop it. The knowledge, negotiating ability, motivation of the buyers and sellers, and applicability of a discount or premium for control will also affect the actual market price achieved. So, valuation conclusion will not necessarily be on the price at which an agreement proceeds. Final transaction price is something else on which parties themselves have to agree, and our opinion is only a factor that should be considered by the parties in agreeing the transaction price. So it is a like a mediation. Suppose one party want to sell and one party want to purchase. So valuation of the property keeps the underlying information that you see that this value is valued like that, you give me nearby price. So the analysis of such nature is necessarily based on the prevailing stock market, financial, economic, and other conditions in general, and industry trends in particular, as in effect on and the information made available to us as of the date there. Occurring after the date hereof may affect this report and the assumption used in preparing it. We do not assume any obligation up to date, revise and reaffirm. So valuer is giving the report as a particularity which is demanded, and conditions changing after the valuation report are not in the preview of the RV to update, revise and reaffirm. So ultimate analysis will have to be tempered by the exercise of judicious discretion by the RV and judgment taking into account the relevant factors. So what are the several factors like management capability, present and prospective competition, yield on comparable securities, market sentiments, which may not be apparent from the face of the balance sheet but could strongly influence the value. Now, unavailability of information on the valuation date, how affect this? So, liquidation value, fair value of assets of the company have been performed as an earlier date based on the provisional unaudited stand-on balance sheet of the company provided by the manager as of the valuation date. So, no financial information as of the valuation date was available for the subsidiaries, associates, hence we have relied upon the latest available financial statements. So, RP has to confirm that there has not been any material change in the financial of subsidiaries and associates since the last available financial statements. As due to the lack of financial as of the valuation date and based on the representation given by the RPA, I have been considered financial as the proxy for the financial position of the valuation date. Valuation report may change post availability of such information. So, in course of the valuation, we were provided by both written as well as verbal information that evaluated the information provided to us by the company through broad inquiry, analysis, and review, but have not carried out a due diligence or audit of information provided for the purpose of his engagement. So our conclusions are based on the assumptions, forecast, and other information given by or on behalf of the company. So are we are independent of the client and company and have no current or expected interest in the company or its interests. So this is a exercise of declaring that we have no conflict of interest with the company. The fee also paid for the services of the RV in no way influence the results of our analysis. Fee is a token of the services, but it will not influence that the RV will do wrong or right on behalf of the fees. So, report is meant for the purpose mentioned above and should not be used for any purpose other than the purpose mentioned there. So it is for the sole purpose, specific purpose, for the intended purpose, and for the time. So report should not be copied and reproduced without obtaining or prior written approval for any purpose other than the purpose for it is prepared. So it is for the particular purpose. If you have used for another purpose, you should consult with the RV, consider the opinion of the RV, whether it is fit for that purpose or not. So this is from my side today. It is a just awareness programs on the valuation side by side to create the awareness among the valuer, to motivate the persons to have the exams on the valuer. It is in the general interest of the public and our co-brothers. So बहुत बहुत धन्यवाद. नमस्कार.